Friends, we will make a beginning with the new topic, redemption of preference shares, multiple choice questions. Earlier we did with the redemption of preference shares and I explained the theory behind this. So also we did few problems on redemption of preference shares. Now let us do with the multiple choice question. First question is, preference shareholders are creditors of the company, customers of the company, owners of the company, none of them. Here the point of interest is, shareholder, when we talk about shareholder is the owner of the company. But here, before we simply say he is a owner, let us tell certain truths about this kind of ownership. This is a peculiar kind of ownership, what it is. See, when we started this company accounts, I said, company is a separate legal entity which is distinct from its shareholders. And assets of the company do not belong to the shareholders, so also the liabilities of the company do not belong to the shareholders. As long as the company is in existence, the assets and liabilities belongs to the company only, not to the shareholders. But then why we are saying that shareholders are the owners? Once the company goes into winding up, liquidation, then what will happen, friends? Then what will happen? That is, all the outside liability holders are going to get paid off. All the outside liability people are all going to get paid off. And then whatever the surplus that remains, first will be paid to the preference shareholders, then will be paid to the equity shareholders. There are two types of shareholders. One is equity shareholder and another is a preference shareholder. How a preference shareholder differs from an equity shareholder? Preference shareholder is one who is given a preference. What kind of preference? They will be given a fixed percentile of dividends. This is one thing. Second aspect of it, once the company goes into liquidation, they will be given a priority to get repayment of their money in comparison with the equity shareholders. First outside liabilities we will pay, then we will pay to preference shareholders, then only we will pay to the equity shareholders. In any case, once you got a share, whether it is an equity share or preference share, since you are going to get dividend, which is an appropriation of a profit, since these people are sharing the profit, we are terming them as owners of the company. But it comes with a caution that generally a owner has got a right to make sale, but in case of the company, the shareholders do not have a right to make sale of the assets of the company, because the concept of separate legal entity is there with the company is the point. So preference shareholders are the owners of the company. Second question, preference shareholders does not have got a right to make the voting. Who has got the voting right? It is only the equity shareholders who has got the voting rights. Then C is the right answer. Then where the preference shareholders are redeemed at a premium, then such a premium may be provided out of. Friends, what is this redemption at a premium? That is, let us suppose I am taking 100 rupees from you and issuing a share of 100 rupees, which I agree to redeem after 5 years at rupees 125. Then there is a difference between the redemption price and the issue price. Redemption price is 125, issue price is 100. The difference you call it as premium on redemption of preference shares. This is a capital loss and we are going to charge it off against the security premium account or the share premium account. What is the security premium? Once the shares are issued at a price above the face value, on the face of the share, let us suppose 100 rupees is there, it got issued for 125, then the difference of 25 you term it as a premium, and such as a premium which you collect at the time of issue of share capital is a capital profit. And as per the Companies Act, what we said, security premium is one which can be used for a limited purposes, and one of the purpose for which the security premium can be used is what? To write off the premium on redemption of preference shares. This is very, very important question, that is premium on redemption of preference shares will be written off against or will be provided out of security premium account. The same you are calling it as a share premium account. B is the right answer. Question number 4. Redeemable preference shares can be redeemed only if they are fully paid up. This is also very important question. Let us suppose at the time of issue, company is collecting for 100 rupees face value of the share only 80 rupees. Then it is called as what? Partly paid up share. Earlier also I made this point very clear, friends. Once company issues the shares, the entire amount it is not going to collect at one time. It will collect that amount in different calls. Along with the application, some amount will be taken. Along with the first, at the time of allotment, it will take some amount, and through first call and the second call, it is going to take some amount. So the point of interest here is, let us suppose 100 rupees is the face value of the preference share, 25 you have taken at the time of application, 25 you have taken it at the time of allotment, and 25 you have taken at the time of first call. So remaining amount that remained unpaid is what? 25. So unless and otherwise the share is a fully paid up share, you can't redeem such kind of preference share. You can't pay back. So first the company has to collect the remaining 25, thereby that partly paid share becomes a fully paid share. Only when preference shares are fully paid, they need to be redeemed as a point. So A is the right answer for question number 4. Question number 5. When preference shares are redeemed out of profits otherwise available for a dividend, a sum equal to the nominal amount of the shares must be transferred to what? Towards capital redemption reserve. Earlier when I explained the theory, what I said, preference shares can be redeemed in two ways. Either by making fresh issue of share capital or by transferring the free reserves which are otherwise available for making the payment of dividend to an account called as a capital redemption reserve. So let us suppose 1 lakh of the preference share capital I want to redeem. What are the options that are available with me, friends? Again, I need to make issue of the shares and redeem the existing shares. Such kind of phenomena you call it as what? Redemption out of capital. Where I am not making again one more issue of the share to redeem the existing shares, then company law says what? You have to lock up your free reserves which are available for distribution as a dividends. So in that situation, what we say, the free reserves which are otherwise available for payment of dividend, that particular amount will get transferred to an account called as a capital redemption reserve. Right? An important note. Preference shares can be redeemed. Preference shares can be redeemed by two ways. Preference shares can be redeemed by two ways. Number 1, out of capital. Number 2, out of profits. Out of capital means making fresh issue to redeem means to pay off, to redeem existing preference shares. Next, out of profit means by transferring free reserves which are otherwise available for distribution as dividend to be transferred to capital redemption reserve, CRR, capital redemption reserve. Then friends, sixth question, of course fifth question C is the right answer. Sixth question, the transfer of capital redemption reserve is allowed from. कैपिटल रिडेम्पशन रिजर्व को कहां से पैसे उसमें ट्रांसफर कर सकते हैं आप? दोस्तों प्लीज रिमेंबर, ओनली फ्री रिजर्व्स कैन बी ट्रांसफर्ड टू दी कैपिटल रिडेम्पशन रिजर्व. सो which free reserves? Which are otherwise available for distribution as a dividend. So capital reserve and share premium, they are not free reserves. So what we say, amount can be transferred from general reserve account to the capital redemption reserve. So amount will be transferred from where to where? Amount will be transferred from general reserve to the capital redemption reserve. Why not from capital reserve and share premium account? Because capital reserve and share premium account are not free reserves. They are not free reserves. So from which account the amounts will be transferred to the capital redemption reserve? From profit and loss account, from general reserve, like that. Whichever is a profit which is otherwise available for distribution as a dividend will get transferred to the capital redemption reserve. In this question the answer is A. Question number 7. Preference shareholders get a dividend at a fixed rate. Unlike the equity shareholders, preference shareholders are going to get will get a dividend at a fixed rate. That is, if you see the preference share certificate itself will tell what is a percentage of dividend. 12% preference shares, 6% preference shares, 10% preference shares. इसका मतलब क्या है? That percentage represents the percentage of dividend that is entitled, that those shares are entitled for. So A is the right answer. Question number 8. Shares having a preferential right to the dividend and repayment of the capital are known as preference shares. How you define the preference share? Preference share is one which has got a preference in respect of payment of the dividend and in respect of repayment of the capital. So the one which has got a preferential right to the dividend and repayment of the capital are known as preference shares. B is the right answer. Question number 9. Redeemable preference shares are those on which capital is to be paid back. Within how many years? Within how many years? That is, redeemable preference shares are one, in respect of which money is redeemable within 10 years. Maximum 10 years, or the period which is stipulated. That period which is stipulated cannot exceed 10 years. Definitely it is a very, very important question. Equity shareholders, when the amount they are going to get back only on liquidation of a company. Whereas preference shares in India can be issued for a period not exceeding 10 years. So within the stipulated period or a maximum of 10 years, C is the right answer for question number 9. Question number 10. Transfer of capital redemption reserve can be from, earlier also we discussed the point, capital redemption reserve को कहां से आप transfer कर सकते? Amount only out of the profits which are otherwise available for distribution as a dividend. So shares forfeited account में से नहीं कर सकते आप, और profit prior to the incorporation account में से नहीं करते, capital reserve में से नहीं करते, क्योंकि ये तीनों capital profits है. So it can be done only through profit and loss account. B is the right answer. Question number 11. Which of the following statement is correct? Redeemable preference shares cannot be redeemed at a premium. No, they can be redeemed at a premium. Company can issue irredeemable preference share. No, in India, companies cannot issue the irredeemable preference shares. They have to necessarily issue the redeemable preference shares, for which a maximum period that is allowed is 10 years. Redemption of preference shares amount to the reduction of the capital under section 100 of the Companies Act. No, redemption of the preference shares does not amount to the reduction of the capital. So the point here is, from 15th May 2001 onwards, no company can issue a redeemable preference shares for a term more than 10 years is a correct statement. B is the right answer. Question number 12. Which one of the following statement is incorrect? That means remaining are correct. Share premium received on issue of shares can be utilized for writing off of the preliminary expenses. Yes friends, you can take it for granted that without you being tested for what is the purposes for which the security premium can be used, there is no paper of the CPT. So security premium can be used for what purposes? A student need to have the clarity. So point here is, security premium received on issue of shares can be utilized for writing off of the preliminary expenses. Yes, Companies Act permits it. So it is a correct statement only. Capital redemption reserve is a sacred reserve. It cannot be used for any purpose other than for issuing the bonus shares. So it cannot be used for any other purpose other than for issuing only the paid bonus shares, fully paid bonus shares. At the time of rights issue, the existing shareholders gain because shares are generally issued at a price lower than the market price. So yes, that is also a correct statement. What is the rights issue? What is bonus issue? Be clear on it. Without collecting anything from the shareholder, just by capitalizing the profits, what the shares are issued are called as bonus shares. What do you mean by right shares? Whenever the company want to make fresh issue of share capital, necessarily it should offer those fresh issues to the existing shareholders. It is called as a rights issue. And point here is that rights issue से जो existing shareholders रहता उनको फायदा मिल जाता, क्योंकि generally shares are there available only at market price, whereas the issue price in case of the right shares generally falls below the market price. So what is the wrong statement? C is the wrong statement. What is C? Discount on issue of shares is shown as a reduction from the capital account. No friends. Discount on issue of shares in company's balance sheet as per the schedule 6, it will be shown under the miscellaneous expenditure. So to say that discount on issue is going to be shown as a reduction from the capital is not correct. Discount on issue will be shown on the asset side of the balance sheet under miscellaneous expenditure? It's a very, very important question. Write down. Discount on issue of shares. Discount on issue of shares will be shown under what? Miscellaneous expenditure on the asset side of the balance sheet. On the asset side of the balance sheet. Then friends, question number 12C is the right answer. Question number 13. Capital redemption reserve account is created. What? Who asked you to create the capital redemption reserve? It is the Companies Act which says that whenever the company wants to redeem the preference shares, it can do it in two ways. One is either by making fresh issue of share capital or by transferring from the free reserve to the capital redemption reserve. These kind of provisions are kept in the Companies Act in order to protect the interest of the sundry creditors who, believing that this much is a capital, supplied the goods. So without making fresh issue or without making a lockup of the profits in the capital redemption reserve, one cannot make redemption of the preference shares. So creation of a capital redemption reserve is a legal requirement, friends. Creation of a capital redemption reserve is a legal requirement. Why? Because Companies Act clearly says that you have to adhere to this particular stipulation that whenever you want to redeem the preference shares, and if in that situation you can't make fresh issue बोले तो तब आप capital redemption reserve create करना पड़ेगा. तो ये क्या है? It is to meet the legal requirement regarding the redemption of preference shares. B is the right answer. Question number 14. Which of the following may be utilized by a limited company for redemption of redeemable preference shares? That is general reserve and profit and loss account, dividend equalization reserves, proceeds of the fresh issue. First two are the free reserves and C is out of capital. So in all these modes you can very well redeem the preference shares. So D is the right answer. Question number 15. Redeemable preference shares can be redeemed if they are paid for not less than 50% of the nominal price, only if they are fully paid, even if they are partly paid, only if they are issued at a premium. Answer is A, friends. What is it? Unless fully paid, preference shares cannot be redeemed. A is the right answer. Question number 16. Consider the following statements. Redeemable preference shares can be redeemed out of sale proceeds of the new issue, sale proceeds of the new issue of the debentures, profits available for dividend, sale proceeds of the assets of the company. Of these statements, which are correct, 1 and 3. How redemption of preference shares will happen, friends? By making fresh issue of shares or by transferring the profits which are otherwise available for dividend to a reserve called as capital redemption reserve. So 1 and 3 are correct with respect to the redemption of the preference shares. A is the right answer. Question number 17. What is the journal entry that will be passed for transfer to capital redemption reserve account? Transfer कैसे करना capital redemption reserve account को? Profit को कम करना, capital redemption reserve को transfer करना. Capital redemption reserve is going to be a liability, so credit the capital redemption reserve, and profit and loss account नहीं तो general reserve को कम करना बोले तो उसको debit करना पड़ता. तो लिख दो एंट्री क्या है? जनरल रिजर्व ऑब्लिक प्रॉफिट एंड लॉस अकाउंट ऑब्लिक डिविडेंड इक्वलाइजेशन फंड अकाउंट डेटार टू CRR, that is capital redemption reserve. So D is the right answer. Question number 18. If preference shares are redeemed by converting into some other type of shares, then friends, please remember the legal requirement that you should create the capital redemption reserve is there only when you want to redeem the preference shares. If you are converting the preference shares into equity shares, there is no requirement to make any creation of a capital redemption reserve is a point. This is also very, very important question from the examination point of view. That is, once preference shares are getting converted into the equity shares, there is no requirement for creating the CRR for the simple reason funds are not going out of the company. So security that is there to the loan people and the creditors is kept intact. So in situation of conversion of preference shares into equity shares, there is no requirement for creating the CRR is a point. A is the right answer. Question number 19. Which of the following funds are not treated as free funds? Security premium and share forfeiture account are not considered as a free funds, and whereas the capital reserve, development rebate reserve, profits prior to incorporation, these are also not said to be free reserves. So the answer is all of them. D is the right answer. All of them, D is the right answer for question number 19. Then दोस्तों question number 20. Which of these is not one of the conditions for redemption of the preference shares? It must be fully paid. Definitely it's a condition. It can be paid out of divisible profits. Yes. This is not a condition. Premium of redemption may be paid out of existing share premium. Yes. Premium on redemption will be written off against the security premium account. This is also correct. So that is, the redemption of redeemable preference share can be paid out of divisible profits is not the point. It can be done only by locking up the divisible profits to a reserve called as a capital redemption reserve. So you can't say they can be paid out of divisible profits is not the point. B is the right answer. Question number 21. Capital redemption reserve account is credited to accumulate the funds to redeem the preference shares in future. No. On redemption of preference shares only you have to lock up your funds by transferring the free reserves to the capital redemption reserve. Then to meet the legal requirements regarding the redemption of preference shares, yes, this is the right answer. B is the point. That is, capital redemption reserve is created to meet a legal requirements regarding this is one of the legal requirement that whenever you redeem the preference shares, CRR, capital redemption reserve, is to be created as a point. B is the right answer. Question number 22. Divisible profits excludes for the redemption of preference shares. दोस्तों, profit and loss account, dividend equalization reserve or dividend equalization fund, these are all said to be divisible profit, but capital profits are not something which are divisible. So C is the right answer, but point here is only divisible profits can be converted into CRR. Only from divisible profits only you have to transfer the amount to the capital redemption reserve account as a point, whereas from the capital reserve you are not transferring the amount to the capital redemption reserve because capital reserve is not a free reserve. Then 22C is the right answer. Question number 23, friends, consider the following statements. Preference shares can be redeemed either out of the profits of the company or out of the proceeds of the fresh issue of shares. Yes, that's a true statement. When shares are redeemed out of the profits, amount equal to the nominal value of the shares redeemed should be transferred to capital reserve. No, it is not to the capital reserve. It is to the capital redemption reserve. Preference shareholders have a preferential right as to the dividend as well as the return of the capital. Yes, it's a true statement. A company cannot issue preference shares redeemable after 20 years. Yes, that is also true statement. 1, 3 and 4 are true statements. So D is the right answer for question number 23. Question number 24. Irredeemable preference shares which were issued by the company before the commencement of the Companies Act 1988 must be redeemed within how many months? Within 5 years. from the date of commencement of the Companies Amendment Act of 1988. Prior to the Companies Amendment Act of 1988, doston, you can issue the, irredeemable preference shares, but with amendment made to the Companies Act, what is stated, if by that time, if any irredeemable preference shares are there, they are to be converted as redeemable preference shares within 5 years is a point. B is the right answer. Question number 25. Any premium payable on redemption of redeemable preference shares must be met either from out of dash of the company or out of dash of the company. See, whenever you pay the premium for redemption of preference share, first you will write off the same against the security premium. If security premium is not sufficiently available, then you are going to write off the same from which account? The profit and loss account is a point to be well remembered. So B is the right answer. Question number 26. Preference share of rupees 2 lakh are redeemed at par, for which a fresh equity shares of 80,000 is issued. What is the amount that should be transferred to CRR? Write the points, friends. That is, amount to be transferred to CRR is equal to, amount to be transferred to CRR is equal to face value of the preference share capital to be redeemed, face value of the preference share capital to be redeemed, minus fresh issue of share capital. Face value of fresh issue of share capital minus face value of fresh issue of share capital. This equation please remember forever, and it's a very important equation. Amount to be transferred to the CRR is equal to face value of the preference share capital to be redeemed minus face value of the fresh issue. 2 lakhs minus 80,000 is equal to 1,20,000. C is the right answer, dosto. Question number, in that second bit is, in the above question, if the shares are redeemed at a 5% premium, what is the amount to be transferred to the CRR? Even if the shares are redeemed at a premium, still always the amount to be transferred to the CRR is equal to face value of the preference shares to be redeemed minus face value of the fresh issue of share capital only. So dosto, even if the preference shares are redeemed at 5%, this equation only will hold good. Whether shares are issued, redeemed at a par or at a premium, the amount to be transferred to CRR is equal to face value of the preference shares redeemed minus face value of the fresh issue of share capital. So in that situation, 2 lakhs minus 80,000 is equal to 1,20,000. Even for the second bit, the answer is 2 lakhs, 1,20,000 only. B is the right answer. Question number 3. In the same question, if the new shares are issued at 10% premium, तुम रिडम्पशन प्रीमियम से करो नहीं तो इश्यू प्रीमियम से करो, मगर कितना अमाउंट सीआरआर को ट्रांसफर करना बोले तो ये सेम इक्वेशन विल होल्ड गुड. व्हाट इज इट? फेस वैल्यू ऑफ द प्रेफरेंस शेयर्स टू बी रिडीम्ड माइनस फेस वैल्यू ऑफ द fresh issue of share capital. Only that difference only should be transferred to the capital redemption reserve, irrespective of the fact whether shares are redeemed at a premium or at a par, or shares are issued at a par or at a premium, is what is the most important point that you should remember. So B is the right answer. Question number 27, doston. X, Y and Z company has to redeem 1000 preference shares of 100 each at a 10% premium. It issues 500 equity shares of 50 each at a 10%. General reserve amount to be transferred to the capital redemption reserve is what? Same thing. What is the face value of the preference shares to be redeemed? 1000 into 100 is equal to 1 lakh. What is the face value of the fresh issue? 5000 into 10 is equal to 50,000. 1 lakh minus 50,000 is equal to how much? 50,000. So how much is the amount to be transferred from general reserve to the CRR? It is 50,000. B is the right answer. Question number 28. Which of the following redeemable preference shares rupees 10 each are eligible for redemption? which of the redeemable preference shares are eligible for redemption? Earlier also we studied this point. Only when preference share is a fully paid up preference share, only then you can redeem is the point. So only those shares on which rupees 10 has been paid can only be redeemed is a point. Partly paid preference shares cannot be redeemed is a point. D is the right answer. Question number 29. Redeemable preference shares of rupees 1 lakh are redeemed at a premium of 10%, for which purpose a fresh preference shares of 50,000 is issued at a premium of 20%. What is the amount to be transferred to the capital redemption reserve? See, here what is happening, you are redeeming preference shares whose value is what? 1 lakh at 1,10,000, for which purpose a fresh preference share capital of rupees 50,000 is issued at a premium of 20%, means 60,000. So what is the amount to be transferred to the capital redemption reserve account? See, it is stated as 40,000, but the answer is 1 lakh minus 50,000 is equal to 50,000. Make A as 50,000. A is the right answer. Question number 30. Redeemable preference shares of rupees 2 lakh are redeemed at par, for which a fresh issue of equity share capital of 80,000 is issued at a discount of 10%. What is the amount that should be transferred to the capital redemption reserve? Here in this case, what is it? 2 lakhs minus 80,000 is equal to 1,20,000. But since these are issued at a discount of what is it, 10%, the proceeds of the fresh issue is only 72,000. So 2 lakhs minus 72,000 is equal to 1,28,000. So दोस्तों यहाँ पे एक बात सुन लो, वो क्या है? In case if a fresh issue is made at a discount, then the amount that should be transferred to the capital redemption reserve is the difference between the face value of the preference shares to be issued, the face value of the preference shares to be redeemed minus proceeds of the fresh issue, not the face value of the fresh issue. In case if the issue is made at a discount, you have to take there as proceeds of fresh issue. Right here only, that is amount to be transferred is equal to face value of the preference shares to be redeemed minus proceeds of fresh issue, that is 2 lakhs minus 72,000. 72,000 brackets में 80,000 into 90%, because 10% is a discount. So 1,28,000, B is the right answer. In question number 29 also, try to understand the point here. Redemption is made at a premium, issue is also made at a premium. If that is the situation, how to do it? Just go back to the question number 29 and please take it like this. When redemption is made at a premium and issue also is made at a premium, then what you do is amount to be transferred to the CRR is equal to face value of the preference shares to be redeemed minus proceeds of fresh issue, that is 1 lakh minus 60,000 is equal to 40,000. That is the case. If issue is made, redemption is made at a premium and issue is also made at a premium, then what is the equation? That is face value or the par value of the shares minus proceeds of the fresh issue. Face value is 1 lakh minus proceeds of the fresh issue is 50,000 into 120% is 60,000. 50,000, 1 lakh minus 60,000 is equal to 40,000. Now I move to the question number 31, friends. XYZ decide to redeem 13,000 preference shares of 100 each at a 10% premium. It has got a general reserve of 9,10,000 and the security premium of 20,000. Minimum number of equity shares of rupees 10 each to be issued for this purpose of redemption. If new equity shares are to be issued at par, कितना issue करना पड़ेगा? पहले देख लो friends. Face value of the redeemable preference shares. Face value of the preference shares to be redeemed. Face value of the preference shares to be redeemed is equal to 13,000 into 100. 13,000 into 100 कितना हुआ दोस्तों? 13,000 into 100 is equal to how much? 13 lakhs. Then amount available for transferring to CRR less amount available to transfer to CRR. Only free reserves can be transferred, so general reserve. Amount available to transfer to the CRR, that is general reserve, 9,10,000. So 13 lakhs minus 9,10,000 कितना हुआ दोस्तों? 3,90,000. So to this you need to, what is it? Make the issue of the shares. Make the issue of the shares. So 3 lakhs कितना हुआ? 3,90,000. And what is the issue price of your equity shares? 10 rupees. 3,90,000 divided by 10, how many? 39,000. But none of the answers has got that 39,000 concept, so that made us to say that none of the above is the right answer. So earlier I gave the equation. Amount to be transferred to CRR is equal to face value of the redeemable preference shares minus face value of the fresh issue. That equation you can modify to what extent? Face value of the fresh issue of share capital that is required is face value of the preference share capital to be redeemed minus CRR is equal to face value of the fresh issue of share capital, that divided by face value of the each share will give you the number of shares. None of the above, D is the right answer. Then if the new equity shares are to be issued at a 30% premium, if the new shares are to be issued at a 30% premium, तभी भी तुम क्या करना पड़ेगा? It is going to be 39,000 only, even if the shares are to be issued at a premium of 30%. Still, what is the point that we are driving? That is, first face value of the fresh issue is equal to face value of the preference share capital to be redeemed 13 lakhs minus amount available for transferring the same to the, what is it? Transferring the same to the CRR 9,10,000. तब बाकी कितना हुआ? 2,90,000. Isn't it? 3,90,000. And that 3,90,000 is to be divided with the face value of the equity shares. So it should be divided with the 10. So 39,000 will come. So you ignore the 30% premium concept. What is the face value of the preference shares to be issued is amount required by way of issue of fresh share capital divided by face value of each share. So 3,90,000 divided by 10 is equal to 39,000. D is the right answer. Question number 3. If the new equity shares are to be issued at a 25% premium, even if the new equity shares are issued at a 25% premium, the same continues to be 39,000. None of the above is the right answer. D is the right answer. If the new equity shares are to be issued at a 20% discount, yes, then you should calculate it in what way? 3,90,000 divided by 8. Because 20% discount means 10 rupees per 20% bole to 2. So 3,90,000 divided by 8 is equal to how much? 48,000. So this also you take none of the above. 48,750 आ जाएगा. None of the above ले लो. बाद में question number 32, redeemable preference shares of rupees 3 lakhs are to be redeemed at par. Balance sheet shows a profit of 30,000 and security premium of 10,000. How much minimum fresh issue is necessary in order to comply with the provisions of section 80? 3 lakhs minus 30,000 is equal to 2,70,000, because security premium of 10,000 you should not consider is a point. You have to consider only the free reserves. you have to consider only the free reserves. Then doston, we move to the question number 33. Redeemable preference shares of rupees 2 lakhs are to be redeemed at a premium of 10%. Balance sheet shows a profits of rupees 30,000, general reserve 20,000, security premium 8,000, dividend equalization fund 50,000. How much of the fresh capital is required? So free reserves क्या है दोस्तों? Profit 30,000, general reserve 20,000, 30 plus 20 50, 50 plus dividend equalization reserve 50. Dividend equalization reserve 50. कुल मिला के 1 लाख. तो 2 lakhs में से 1 lakh निकाल दिए तो 1 lakh is the amount of the fresh issue of share capital you have to make. So D is the right answer, not C. D is the right answer. How come D is the right answer? What is the amount that you can transfer to the CRR? Profit को transfer कर सकते आप 30,000, जनरल रिजर्व को ट्रांसफर कर सकते आप 20,000, 30 plus 20 50,000 और डिविडेंड इक्वलाइजेशन फंड को what is it, you can go ahead with it. So कुल मिला के 1 lakh हो गया. तो 2 lakhs minus 1 lakh is equal to 1 lakh. Security premium cannot be used. E is the right answer. E. 1 lakh is there in the E. Okay. Question number 34. Calculate the amount to be transferred to the capital redemption reserve account in each of the following cases. Redeemable preference shares of 50,000, redeemable at 5% premium, new issue of shares of 30,000 at a premium of at 10%. We are not bothered about the premiums. We only take the face value of the preference shares to be redeemed minus face value of the fresh issue. So 50,000 minus 30,000 is equal to 20,000. So when both shares are to be issued at a premium, so then ignore the premium situation and face value minus face value, you take the difference as the amount to be transferred, amount of the equity share capital to amount to be transferred to the CRR. Redeemable preference shares of 50,000, redeemable at a 5% premium, new issue is 30,000, so amount to be transferred to the capital redemption reserve is 20,000. Then 34, redeemable preference shares of 50,000, redeemable at 5% premium, new issue of shares 30,000 at par. Then also 50,000 minus 30,000 is equal to 20,000. B is the right answer. You ignore the premium on redemption of preference shares. Then redeemable preference shares of rupees 50,000, redeemable at par, new issue of preference shares 30,000 at a discount. जब discount है तो you be careful. What is the proceeds of the fresh issue? ले लो. Proceeds of the fresh issue क्या होगा? 30,000 into 90% means 27,000. तो fresh issue से कितना मिल रहा आपको? 27,000 मिल रहा, क्योंकि 30,000 face value of the share got issued at a discount of what? 10%. Discount 10% निकाल दिए तो proceeds कितना हुआ? 27,000 हुआ. 50,000 में से 27,000 निकाल दिए तो 23,000 आएगा. तो वो 23,000 के पास लिख दो 50,000 माइनस 27,000. वो 27,000 कैसा है? 30,000 into 90%. B is right answer. Question number 35. A company's balance sheet shows the following information. Outstanding redeemable preference shares are 2 lakhs. Premium on redemption is 10%. Divisible profits available are 1 lakh. Security premium account is 15,000. Fresh issue is to be made at a discount of 10%. The face value of the fresh issue of the shares will be. कैसे कैलकुलेट करते दोस्तों? Write down first face value of the preference shares to be redeemed. Face value of the preference shares to be redeemed 2 lakhs less amount available to transfer to CRR less amount available to transfer to CRR. कितना? 1 lakh. Next, balance to be raised by fresh issue of shares. Balance to be raised by fresh issue of shares 1 lakh. So number of equity shares is equal to amount to be raised divided by face value per share minus discount per share. Face value per share minus discount per share. What is it, friends? That is 1 lakh divided by 9. 1 lakh divided by 9 कितना? 11,667. Isn't it or not? 1 lakh divided by 9 कितना होता? What is the face value of the fresh issue of the shares? कितना आ गए वो बता दीजिए आप. 11,111. Then one more step, number of shares into number of shares into face value, that is face value per share, that is 11,111 into 10. 11,111 into 10 is 1,11,111. That is the correct answer. In the place of the B, you put 1,11,111 and make B as the right answer. Question number 36, friends. Identify which of the following redeemable preference shares of rupees 10 each would be eligible for redemption. The one which is fully paid up, on which rupees 10 has been paid. C is the right answer for question number 36. Dosto, earlier also we studied, unless the preference shares are fully paid up, you can't redeem the preference shares. So question number 36, kindly make it C as the answer. Question number 37. A company wishes to redeem its preference shares amounting to 1 lakh at a premium of 5%. And for this purpose, it wants to issue the equity shares of 5,000 equity shares of 10 each at a premium of 5%. Company also has got a balance of 1 lakh as a general reserve and 50,000 in profit and loss account. The amount to be transferred to the capital redemption reserve account for the purpose of redemption is what? See, the face value of the preference shares to be redeemed is what? 1 lakh. The face value of the fresh issue of share capital is what? 50,000, because 5,000 into 10 is equal to 50,000. So 1 lakh minus 50,000 is equal to 50,000. That is the amount to be transferred to the CRR. What is the amount to be transferred to the CRR? Face value of the preference share capital to be redeemed minus face value of the fresh issue. Ignore about the premiums. B is the right answer. Question number 38. A limited company has to redeem the redeemable preference shares of value 1 lakh, for which company has issued 3,000 equity shares of 10 each at a premium of 10%. The amount to be transferred to the capital redemption reserve is what? 1 lakh minus 30,000 is equal to 70,000. C is the right answer. Then friends, question number 39. The company's balance sheet inter alia contains 1,60,000 fully paid 10% redeemable preference shares, rupees 1,000 share premium, 1,31,000 as revenue reserve. It resolved immediately to redeem the above mentioned shares at a premium of 5%. Maximum utilization of the earnings from the fresh issue. If the issue is made at 20% premium, minimum amount of fresh equity issue proceeds will be what? Face value of the preference share capital to be redeemed 1,60,000 less amount that can be transferred to CRR, less amount that can be transferred to CRR 1,31,000. बाकी कितना है? 1,60,000 minus 1,31,000. What is it? 29,000. So make A as the right answer and make it 29,000. Then friends, this is about question number 39. Of course, the 29,000 into 120% करके देख लो एक बार. 29,000 into 120% बोले तो 34,800 आ जाएगा. If that is the case, you have to put 34,800 as A, but here we are only looking at face value of the equity share to be issued. With that this thing I am saying the answer could be 29,000. Other way around, 29,000 is the face value of the preference shares. Proceeds of the fresh issue will be 34,800. There in your booklet itself you write 29,000 is the face value of the preference shares, face value of the fresh issue, whereas proceeds of the fresh issue is 29,000 into 120%. 29,000 into 120% is 34,800. Question number 40. Which of the following statement is false? Preference shareholders are creditors of the company. No, preference shareholders are the owners of the company. So B is a wrong statement. Other three are the correct statements. Please go and read that. B is the right answer. Question number 41. Following statements apply to the equity/preference shareholders. Which one of them applies only to the preference shares? Dividends are usually a set amount in every year. Is the same amount in every year? Yes, in case of the preference shareholders, dividend is a fixed percentage of the dividend, so dividend will always be the same for every year is a point. Unlike the equity shareholders who are going to get the dividends in different years in different ways, because it is a prerogative of the directors to declare the dividend as they like for the equity shareholders, whereas that is not the case with the preference shareholders. They get dividends at the same amount for every year. D is the right answer. Dividends are usually a same amount in every financial year. Question number 41, D is the right answer. Question number 42. As per the Companies Act 1956, only preference shares which are redeemable within dash years can be issued as only within 10 years. Maximum period that is allowed is 10 years. Option D is correct, make it 10 years. Now with Companies Amendment Act of 1988, maximum number of years within which the preference shares to be redeemed is at 10 years. 42D is the right answer. 43. Unless and otherwise stated, a preference share is always deemed to be, it's a cumulative preference share and non-participating and non-convertible. So, friends, please do remember, preference shares, unless specifically stated, it is to be presumed that on them whatever the dividend is there, that is cumulative. Cumulative का मतलब क्या है? ये साल पे प्रॉफिट्स नहीं है तो दूसरे साल में ये साल और वो साल का दोनों मिला के देना पड़ता, उसको क्या मानते हम? क्यूमुलेटिव मानते. और नॉन पार्टिसिपेटिंग मीन्स दे आर नॉट गोइंग टू पार्टिसिपेट इन द सरप्लस एंड नॉन कन्वर्टेबल बोल के एज्यूम करना पड़ेगा.